Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. In a light week of economic data, that is ahead of the festive season, the market's attention shifted on the release of the RBA latest monetary policy meeting minutes from the December board meeting early today. From the release, market participants scrutinised for clues around the future of the RBA's QE programme ahead of its all-important February 2022 rate decision meeting. The minutes said that the emergency of the recent variant was a new source of uncertainty, but it was expected to derail the recovery, that is, add in inflation and increased, but remained low in the underlying terms. Although, if there were any serious economic setback, a different set of options would need to be considered. As the Australian dollar continues to poke at the level of 70.90, we can still see from a technical point that the risk is still holding towards this level. It is a bit of a sort of a challenge as we're going into a slightly light liquidity due to the festive season, and that is a break of 70.90 would expose the downside around 70.20 and give an objective around 69 figure 60. Any advancement sees immediate resistance around 71.50 with the cap above at 72 figure 15. The euro, in some respects, has been travelling sideways for at least the last couple of weeks, but the technicals not giving little away. Nevertheless, I still feel that with the lackluster price action ahead of the festive holiday season, that we might see the resistance cap around 113 to about 113.45 to hold, as you can see many times did fail, and therefore look back towards the bottom side of the range around 112.45 and eventually down towards the broader picture, which we look at the monthlies, is around 111.30.35. The dollar yen, well, since that sort of not really to my view as a bullish candle, that is a dragonfly doji, but more to a hanging man, and I feel that there is still a pretty much bearish or supply around that 114 region, and that is that from the level of 114.15.25 any attempts should be considered as a bearish and possibly a rejection, and therefore look back towards the bottom side of 113.35 with the support seen key at 112.65. Although the Bank of England last week did hike rates, the market has somewhat remained in a negative sentiment, even though there was some divergence, and still is. I feel that the level around 131.50.70 should still display bullish sentiment or bullish traction, and see a rebound from there and eventually see the market rise up towards 132.45 to 133 and even around that region of 133.80.90. The risk is still for CAD yen to the downside. I'm looking towards that target around 87.20.25 with still a negative bias with the two indicators being the RSI and the MACD. Also the ADX is starting to trend somewhat and therefore could continue to see this decline, and therefore that would mean the yen strength while CAD weakens. The gold aspect since posting a gravestone doji and the rejection from 1,815 now waits to see the trigger level of 1,788 to be pulled. If so, would give further indication to the downside, even though there was a strong hammer posted from the rejection of 1,757. Although I feel from that level, anywhere from 1,757 to 64 may again be defended. It is a key level. Nevertheless, we're right on the cuff of 1,788, and as I said, a break should expose further weakness and may even see eventually this level go, which is what the call is, but let's take one step at a time. Interesting to see that the down challenge overnight hit the lows around $66 a barrel and has posted a bearish dragonfly doji which in terms is a weak bull signal. Like the hammer, we do need to see further confirmation to that doji, and if we do see a break above the level of 70.45, could ignite the move back up towards $74 a barrel. However, with the new variant still causing a lot of concerns that eventually we might see another down test. But overall, technically, we are weak, so it depends on how strong this Dragonfly doji is. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.